Today we will do an in-depth analysis of RateGain Travel Technologies Limited as of 29th of Oct 2025. Disclaimer: this video is for education and information only. It is not investment advice or a recommendation to buy, sell, or hold any security. I'm not a CB registered advisor or research analyst. The video may contain errors or omissions. Do your own research and consult a licensed professional. Let's talk about company overview and offerings. We're analyzing RateGain Travel Technologies Limited, listed as RateGain on NSE and BSE, code 543417, as of 27th Oct 2025. RateGain is an India-headquartered travel and hospitality SaaS provider that helps hotels, airlines, OTAs, car rentals, cruise lines, and other travel operators improve revenue using data analytics, rate intelligence, distribution connectivity, and marketing automation. The company serves roughly 2,400 hotel brands, 160-plus OTAs, and over 700 travel and hospitality companies across more than 100 countries. Its revenue model blends recurring subscriptions with transaction-linked usage fees. Let's talk about what the company does. RateGain's platform spans three core lines. First, data as a service. Products such as AirGain and Rate Intelligence deliver real-time market pricing, rate parity monitoring, and demand intent data drive pricing decisions for airlines and hotels. Second, distribution. Channel management, GDS and OTA connectivity, and booking engine tools that keep inventory and prices synchronized and help reduce overbooking. Third, marketing technology. Social and reputation management, demand generation, and ad tech capabilities anchored by assets like BCV, Soho, and Adara to help clients acquire and retain guests. A unifying layer called UNO ties these together and increasingly embeds AI features, including the voice agent Viva, multi-language capability, and AI-assisted revenue management. Let's talk about products. In DaaS, the toolkit includes price intelligence at scale, near real-time scraping of airfare and hotel rates, parity alerts, and intent signals. In distribution, the toolkit includes Hotel Channel Manager, Booking Engine, CRS interfaces, and GDS pipes. In MarTech, the toolkit includes Social Media Command Center, Review Response, Audience Targeting with Travel Intent Data, Programmatic Media Buying, and Destination Marketing Workflows. Newer product threads in 2024-2025 include UNO RevMax upgrades, the AI voice agent Viva across 18-plus languages, Smart AI revenue management, and AI integrated direct booking flows. Let's talk about revenue mix. For FY 2024-25, marketing technology was the largest contributor at about 47.6% of revenue, boosted by integration of Adara's ad tech revenues. DaaS contributed roughly 32%, and distribution the balance near 20%. Geographically, a majority comes from North America and Europe. India and broader APAC are smaller but rising as RateGain adds mid-market hotels and partners across MEA and APAC. Let's talk about stock performance since listing. The IPO in December 2021 priced at $425 per share. Listing was near $360, roughly 15% below issue price. The stock rallied through 2022-2023 to an all-time high around $853 in mid-2024. A sharp correction followed in late 2024 to a 52-week low near $365, approximately a 56% peak-to-trough drawdown. Through 2025, the stock recovered. By October 2025, it traded around $640-$680, including an 8% jump on the 01st Oct 2025 after announcing the Sojern acquisition. From IPO issue price $425 to $650, the annualized CAGR is roughly 11% over about 3.8 years, with high volatility. Let's talk about revenue trend in the last 3 years. Consolidated operating revenue rose from about 565 crore in FY23 to 957 crore in FY24, then to 1,076.7 crore in FY25, implying 12.5% year-on-year growth in F25 after 69% in FY24. Trailing 12 months, including Q1 FY26, is roughly 1,090 crore. Up low single digits versus FY25 as Q1 FY26 printed about 273 crore, up 5% year-on-year. Across FY23-FY25 there was no annual revenue decline. The curve is up, with growth normalizing post-pandemic. Let's talk about new products and services and expected mix. In June 2023, RateGain acquired Adara, a travel data exchange and ad tech firm, for roughly $16 million, which helped make MarTech the largest segment in F25. On 1st Oct 2025, RateGain announced a definitive agreement to acquire Sojern, a U.S. travel advertising platform, for $250 million cash. Sojern reported $172 million revenue in 2024, about 1,430 crore at 83.84 per USD, larger than RateGain's FY25 revenue. Post-integration, MarTech plus advertising could exceed 60 to 65% of total revenue on a pro forma basis. Organically, UNO RevMax, Viva, Smart AI revenue management, and AI-integrated direct booking flows aim to deepen upsell into mid-market hotels. Near-term management guidance remains conservative to allow reinvestment in go-to-market capacity. Let's talk about order book or backlog. RateGain does not publish a traditional order backlog. It discloses quarterly bookings and sales pipeline as leading indicators. In Q1 FY26, new contract wins were about 81.7 crore, up roughly 38% year-on-year, a six-quarter high. The advanced pipeline stood near 512 crore, close to half of FY25 revenue, signaling healthy conversion potential. Let's talk about revenue dips and reasons, if any. There was no annual revenue dip across FY23 to FY25. The deceleration from 69% growth in FY24, 12.5% in FY25, reflects normalization from a low base and a deliberate shift toward higher margin business mix rather than a structural demand issue. Let's talk about EBITDA trend. EBITDA rose from roughly the mid-80s crore range in FY23 to about 189 crore in FY24 and 232.3 crore in FY25, outpacing revenue growth. There was no annual EBITDA decline in this three-year window. Q1 FY26 margin printed 18.2% after annual wage resets and stepped-up GTM investments, consistent with seasonal Q1 patterns. Let's talk about EBITDA dips and reasons, if any. On an annual basis, there was no EBITDA decline. On a quarterly basis, margin softness in Q1 typically reflects annual salary increases and deliberate investments in sales capacity, especially in APAC and the Middle East, rather than structural pressure. Let's talk about EBITDA margin trend. Operating EBITDA margin expanded from roughly 15% in FY23 to 19.8% in FY24 and 21.6% in FY25, a new high. Q1 FY26 at 18.2% is seasonally lower. Full-year FY26 guidance is around 15 to 17% as the company balances reinvestment with profitability, with an aspiration to outperform guidance when conditions allow. Let's talk about leverage and debt to equity. RateGain is effectively net cash. Debt to equity is 0.0. Cash and equivalents were around 1,050,280 crore in mid-2025, and interest coverage is comfortable. To fund the 250 million Sojern acquisition, the company has indicated a mix of cash on hand, debt guarantees up to about $150 million, and a potential equity raise. Even after funding, leverage is expected to remain moderate. Let's talk about cash flow conversion versus peers. In FY25, operating cash flow was about 120 crore against EBITDA of 232 crore, implying conversion near 52%, weaker than FY24's 80%. Working capital expanded, with receivables and unbilled revenue higher. Working capital days were near 227 by March 2025. Relative to peers like IndiaMart, often 100% conversion due to advanced billing, RateGain's FY25 conversion screens as weak. Tightening collections and managing media-heavy billing cycles are key watch items. Let's talk about the stock price trend in the last 1 year. From October 2024 to October 2025, the stock moved from 365 lows to 64700, a rebound of roughly plus 75% to 90% off the bottom. The late 2024 fall coincided with FII selling and growth normalization. The 2025 recovery aligned with record quarterly bookings, strong Q4 FY25 PAT growth, and the Sojern announcement in October 2025. Let's talk about promoter share activity. Promoters hold about 48.16% with 0% pledge. The notable change was a 3 percentage point trim in FY24 via secondary sales to increase free float. There is no recent disclosure of open market promoter purchases. Let's talk about valuation using PE, price to book, and EV to EBITDA. On late October 2025 trailing numbers, PE is about 25 to 26 times, below a software sector average in the low 40s and below premium Indian vertical SaaS names, reading as fair to undervalued on earnings if growth accelerates beyond guided 6 to 8%. Price to book is roughly 3.2 to 3.3 times on a book value per share near 195 and price near 640, broadly in line with mid-cap IT and below high ROE marketplaces, reading as fair on book with ROE in low teens and expanding. EV/EBITDA is about 26 to 27 using EV near 650 crore and EBITDA near 235 crore, moderate to high in absolute terms, but within vertical SaaS ranges. This reads as slightly expensive to fair unless growth re-accelerates. Let's talk about variables and risks. Industry cyclicality and travel demand, high, because macro slowdowns and shocks can reduce volumes and ad spend. Seasonality, medium, with peaks in summer and holiday windows and softer periods in certain quarters. Customer concentration, low to medium, with 2,400 clients reducing single-name exposure, but reliance on segments like OTAs and chains still relevant. CapEx and working capital intensity, medium, CapEx is low, but FY25 working capital stretched and dampened cash conversion. Policy and regulation, low. The main exposure is global data privacy regimes and routine competition clearances for M&A. FX, medium, USD-linked revenue with INR-heavy costs can pressure reported growth if INR strengthens. Execution, medium, integrating Sojern, nearly RateGain size, requires careful delivery. Technology disruption, medium to high. Sustaining AI product velocity against global competitors is essential. Contingent liabilities, low. A 5.97 crore service tax demand was set aside in October 2025. Promoter pledge, 0%, which is low risk. Let's talk about latest news in the last 1 to 2 months. On the FY26 2025, RateGain announced a definitive agreement to acquire Sojern for $250 million cash, with targeted closing by December 2025 subject to U.S. antitrust approval, and considered an equity raise to support funding. In September-October, BCV was rebranded as Soho, positioned as an AI-driven social platform for hotels, and AI feature rollouts across UNO continued. On 10th of October 2025, the Sistat set aside a 5.97 crore service tax demand. Let's talk about analyst ratings and reviews. Aggregated broker sentiment in late October 2025 skews toward buy, with most ratings in buy or strong buy and a minority in sell or strong sell, reflecting cautious near-term growth expectations but constructive views on scale-up and margins. Earlier at 2024 peak valuations, some houses were more reserved. After the correction, concerns eased, and the Sojern transaction is generally viewed as strategically positive, with execution watchouts. Let's talk about mutual funds and flows. Domestic mutual funds collectively hold in the high teens to low 20% through 2025. A notable disclosed move was ICICI Prudential Mutual Fund crossing about 5% in February 2025 when the stock traded around 475.530. Through mid-2025 into September 2025, there were indications of modest net trimming as prices rebounded, while core holders remained invested. Let's talk about FIIs. FII ownership is around 5 to 6% in late 2025, down from about 10% at the start of 2024. Reductions coincided with the late 2024 drawdown. Through 2025, flows stabilized around mid-single digits. With improved scale and a larger U.S. footprint post-Sojern, foreign interest could shift over time depending on execution. Let's talk about promoter contribution. Promoter shareholding is about 48.16%, a stable anchor stake with no pledges. Let's talk about government regulation. There is no direct sector-specific rate setting or licensing. The company complies with CB listing requirements, corporate law, and global data protection norms such as GDPR and CCPA, and will pursue routine antitrust clearance for acquisitions like Sojern. The principal indirect regulatory sensitivity is privacy and tracking changes that can affect ad tech data flows. Let's talk about growth outlook from the last 2 investor calls. Management's tone is cautiously optimistic. For FY26, guidance is 6 to 8% organic revenue growth and 15 to 17% operating EBITDA margin as the firm invests in GTM and product, notably in APAC and the Middle East. New bookings in Q1 FY26 were a 6-quarter high at 81.7 crore, and pipeline exceeded 500 crore, supporting visibility. Medium-term aspiration is to exceed guidance and accelerate once Sojern consolidates and cross-sell begins to contribute. Let's talk about management guidance for the next 12 to 24 months. Near term, guidance is conservative, mid-single-digit organic growth and mid-teens margins in FY26 while reinvesting. Over 12-24 months, objectives include closing Sojern by December 2025, integrating operations and data assets, expanding SMB hotel penetration via UNO and AI assistance, deepening airline and DMO relationships via Adara and Sojern, and targeting a return toward double-digit revenue growth with healthy 18 to 22% operating margins as scale synergies unlock. Let's talk about future order book. The company does not publish an EPC-style backlog. It discloses bookings and pipeline. The latest figures, pipeline around 512 crore and quarterly wins near 82 crore, serve as practical leading indicators. A pro forma backlog proxy may emerge post-close as multi-quarter media commitments and retainers from Sojern consolidate, but bookings and pipeline remain the best near-term gauges. Let's talk about how investors generally frame decisions. This is educational and not advice. Different investors use different frameworks. For handling drawdowns, some investors evaluate whether their original thesis still holds by monitoring company-reported metrics, such as year-on-year revenue growth versus guidance, operating EBITDA margins versus guidance, sales pipeline conversion, and cash flow conversion. If these metrics deteriorate materially for multiple quarters relative to management commentary or peers, some investors reassess risk and exposure. For managing gains, investors sometimes use rule-based approaches to manage winners, such as partial de-risking on strength, or trend-following rules based on long-term moving averages or prior swing highs and lows. These are illustrative frameworks that different investors may study. They are not recommendations and may not suit all risk profiles. For considering new positions, a common educational approach is staged allocation or dollar-cost averaging to mitigate timing risk, paired with predefined thesis and validation checks. Examples include failed acquisitions, multi-quarter revenue shortfalls relative to guidance, or persistent deterioration in working capital and cash conversion. Viewers should consult a licensed advisor before taking any action. Let's talk about closing thoughts. RateGain has evolved from rate intelligence and connectivity into a broader AI-enabled travel commerce platform. FY25 revenue was 1,076.7 crore, EBITDA 232.3 crore, and operating margin 21.6%. TTM revenue is around 1,190 crore, with Q1 FY26 bookings at 81.7 crore and pipeline about 512 crore. The $250 million Sojern deal, if closed by December 2025, could roughly double the revenue base and tilt mix further toward MarTech and advertising, with the execution trade-off of integration and careful margin stewardship. Valuation at roughly 25-26 times PE, 3.2-3.3 times PB, and 26 to 27 times E reads as fair to modestly attractive versus Indian vertical SaaS, provided growth reaccelerates into FY27. Key sensitivities remain travel cyclicality, cash conversion discipline, and integration execution. This video is for education and information. Please do your own research and consult a licensed professional before making any investment decisions.